Hi guys, it's Marissa here from Rise High, and today I'm coming to you to give you some tips on how you can negotiate a better interest rate with your current bank on your home loan. Unfortunately, it's really common for the Australian banks to reward new customers and try and entice them with great deals and special offers, and often forget to reward their existing and loyal customers. So it's therefore really important that you take proactive steps and action to make sure that you're continuously getting a really competitive interest rate on your home loan and that your bank is looking after you. I'm going to leave you with 6 tips today on how you can negotiate a better interest rate with your current bank. The first tip is know your interest rate. So that sounds really simple, but it's surprising how many people don't actually know what they're paying on their home loan. Other things that you need to know about your home loan is you need to understand whether you're paying principal and interest or interest only. If you are paying interest only, could you consider paying principal and interest to perhaps try and negotiate a better interest rate on your loan? Other things you need to look at is your current interest rate a variable interest rate or a fixed interest rate. If it's a fixed interest rate, it may have a break cost associated with changing your interest rate. If it is fixed interest rate, you want to find out when the fixed interest rate expires so that you know what you're dealing with. So that's the first tip. Know your interest rate, understand what type of loan you've got. Is it owner-occupied loan? Is it an investment loan? Is it interest only? Is it principal and interest? Is it variable? Is it fixed? Once you know what your loan actually is, then you're ready to move on to step 2. Step 2 is to research competitor offers for the same type of product that you've got. So that's basically looking at what else is out there in the market. Couple of ways you can do this. Obviously you can shop around, you can look on internet sites, but a great way is to speak to a mortgage broker to see what other opportunities are available for you, to see what the competitor offers are. That will help to get your ideas around how much your bank might be willing to come down based on what other competitors are offering. And it's really important to take care in this step because even a 0.5% reduction in your home loan interest rate can save you over $2,000 a year in interest and an average $400,000 loan size. This is considerable and it should better in your pocket than in the bank's pocket. Okay, step number 3 is to actually call your bank, and you specifically want to ask to speak to their retention team. That's when they know you mean business. So you need to make it really convincing that you are going to refinance and move to another bank, one of their competitors, if they don't come to the party and match a better rate that you have found for the loan product that you've got. Speaking to the retention team is either going to result in 2 different outcomes. The first one might be that retention team might come to the party and be willing to offer you a discounted interest rate on your loan and apply it immediately. Alternatively, they might tell you that that's not possible and they may not apply enough discount or any discount, in which case you might not be satisfied with the outcome. So if that happens, then you need to be prepared to move on to step number 4, which is be prepared to refinance. I understand that sometimes you think, oh, that's a bit of a hassle, but really it's not. And if you can save thousands of dollars each year in refinancing to another lender, then you need to be prepared to put your money where your mouth is and take the action that is going to result in keeping more of your money in your pocket than in the bank's pocket. So that's a really important thing. Finally, please don't make this a set and forget. No home loan is set and forget facility. Tip number 5 is to make sure that you're constantly reviewing your home loan, constantly reviewing your interest rate, because once again, I said at the beginning, banks reward new customers, not loyal customers. So it's up to you to make sure that you're getting a good rate every year. So every 12 months, make sure you're doing a review and contacting your bank for better pricing. Alternatively, you can go with tip number 6, which is make sure you have an awesome mortgage broker, like the team at Rise High, for example. Because an awesome mortgage broker, a really good mortgage broker, will not only set you up with the right loan to start with, but will actually do proactive repricing and proactive annual reviews every 12 months for you on your behalf. And we don't charge a fee for that. So a good mortgage broker won't charge a fee for that. They'll include that in their service. So basically everything that we've just described, all the steps that we've just gone through, a good mortgage broker can do that on your behalf and it won't cost you anything. So hopefully that's helped you today. Make sure that you're trying to keep more money in your pocket than in the bank's pocket, and good luck trying to negotiate a better interest rate on your home loan. Thanks and have a great day. Bye.